So let's dive into what's been shaking things up in the U.S. stock market lately. What's been driving these interesting shifts we've been seeing. And hey, if you're enjoying this, don't forget to hit that like button and subscribe. Keep those insights coming right to your feed, all right? So first things first, we saw a pretty significant jump, a real upswing in those major U.S. stock market indexes just this past Monday, in fact. And it seems like a lot of this positive energy, this optimism, is tied to what people are anticipating, what they're expecting from President Trump's administration, specifically when it comes to the next round of tariffs. So let's break this down. Let's unpack exactly what's behind this market reaction. And we'll touch on some other important financial news while we're at it. First off, let's look at how these tariff developments are playing out. What's the impact? We've got these reports popping up suggesting that the Trump administration might be willing to be a bit more flexible when it comes to those tariffs that are supposed to kick in around April 2nd. And this news, it seems to have given the market a little boost, a little shot of good vibes. What's really interesting to me is how the market reacts to any hint, any little signal about potential changes in trade policy. It's almost like it's become hypersensitive. We've seen this kind of thing before, haven't we? Remember back in take a hypothetical based on critique example, when we had similar rumors floating around about some tariff adjustments, something about a specific industry hypothetical, right? And we saw that was a percentage hypothetical percent jump in those related stock prices. And it all happened within time frame hypothetical. It's crazy how all this pent-up anxiety, all that nervous energy can lead to such rapid changes in how things are priced, just based on trade news. Yeah, and the speculation, the rumors that some countries might get passed, might be exempt from these reciprocal tariffs. And that maybe, just maybe, those new sector-specific tariffs, the ones targeting automobiles, pharmaceuticals, semiconductors, maybe those won't actually happen. Well, it's clear that the market's taking this as a less aggressive stance on trade, less hardline than what people were initially bracing for, right? And let's not get ahead of ourselves here. It's important to remember that even with this good news, the expectation is still that tariffs are coming. They're going to be slapped on a pretty big chunk of goods coming into the U.S. But the fact that President Trump used the word flexibility when talking about these tariffs, well, a lot of people are reading into that. They're seeing it as a possible sign that he might be softening his stance a bit, the stance he's held so firmly on trade. So connecting this to the bigger picture, the core idea here is reciprocal tariffs, right? The understanding is that whatever tariffs the U.S. ends up putting in place, they're generally going to mirror what other countries are already doing to American goods. It's all about reciprocity. That's the key to grasping the potential economic impact of how the market's going to react to any perceived shift in the administration's game plan. And let's face it, the market's reaction has been pretty dramatic, hasn't it? Like we talked about earlier, those stock prices shot up on Monday, right after those reports came out. So we've got this positive wave across the major indexes, but it's interesting to see which specific stocks and sectors really spearheaded that surge and what that tells us about what the market's really banking on where it's expected. Well, one thing that really jumped out was the gains we saw across the board in technology stocks. This sector, it's always been pretty vulnerable, pretty sensitive to worries about trade disputes, wouldn't you say? So any sign, any glimmer of hope that those tensions might be easing, well, it tends to get a warm welcome, a positive response. And of course, we can't forget about Tesla, right? Their stock had a huge rally. And it seems like that's pretty closely tied to the speculation because the automotive sector might actually dodge these new tariffs. It's like the market's putting its money on the idea with the hit to auto imports, the potential impact on Tesla's supply chain and sales. Maybe it'll be as bad as everyone was fearing. It really goes to show how specific industries react to any news about tariffs, doesn't it? The possibility that those auto tariffs might not happen, well, that's a direct positive signal for companies like Tesla. And we saw gains in other big players too, right? Like Palantir Technologies, Amazon, Boeing, all of them moving upwards. It's a sign that this optimism, this positive feeling in the market, it's spreading beyond just tech and autos. That's a great point. And it wasn't just those big name, large cap companies that were celebrating, the Russell 2000 index, which tracks the performance of smaller companies, that was up too, showing positive movement. So it seems like that good feeling about tariffs, it was pretty widespread across the board no matter what size the company. Yeah, and what's really interesting is how some stocks that you might not immediately associate with tariffs also performed, like Vistra, for instance, a utility stock with ties to artificial intelligence. That actually rallied. It suggests that there's more at play here than just tariff-related enthusiasm, maybe broader market excitement and some company-specific developments are also fueling this. The connection might not be directly related to tariffs, but it does highlight the overall market sentiment, wouldn't you say? Vistra's role in providing energy infrastructure for that booming AI sector, well, that makes it pretty attractive to investors who are looking for growth areas. So that positive mood in the market, that boost from the tariff news, it probably contributed to increased interest in companies with strong growth potential, companies like Vistra. And similarly, those gains we saw in United Airlines and Deckers Outdoor, they just reinforce how broadly this positive market reaction actions played up. Now, let's shift gears a bit and look at some specific investment activities, some moves that caught people's attention. Cathie Wood's ARK Invest, they made a pretty big splash, didn't they? They significantly increased their stake in Beam Therapeutics. And that raised some eyebrows, especially considering that Beam's stock price has taken a pretty big hit since its 2024 high. It's a classic example of what some might call contrarian investing. They're basically going against the current, betting against that negative sentiment, buying when others might be selling, hoping for a turnaround down the road, you see. Beam Therapeutic stock, it had been on a downward slide. And ARK Invest coming in and buying like that, well, it suggests they believe in the company's long-term potential, despite those recent market headwinds. And it's worth noting that ARK also made purchases in other companies, right? In the tech and biotech sector specifically. Iridium Communications, Recurgent Pharmaceuticals, the Pacific Biosciences of California, all of them added to their portfolio. But on the flip side, ARK also decided to trim some fat, so to speak. They sold off some of their shares in Illumina, a medical research equipment company. So they're adding to some positions, reducing others. It gives you a glimpse into how these active managers are navigating this current market environment. They're spotting potential opportunities in companies that have stumbled lately and maybe rethinking some of their existing holdings. Now, for a bit of a reality check, doesn't have tough news. 23andMe, that DNA testing company, they saw their stock value plummet, didn't they? A drop of around 50% following their bankruptcy filing. It's a pretty dramatic turn of events for a company that once held so much promise. They were flying high with a much higher valuation. The situation with 23andMe, it really underscores the risks that come with these biotech and consumer genomics sectors. And the fact that their former CEO, Ann Wojcicki, resigned, well, that signals a major shift for the company as they try to navigate these choppy waters. Think about it. Their stock went from a peak valuation of billions of dollars to trading in just a fraction of that. It highlights just how volatile these growth stocks can be and how crucial it is for a company to have a solid financial foundation. It all circles back to this overarching theme of uncertainty, doesn't it? President Trump's back and forth on tariffs, it's created a lot of anxiety, a lot of volatility for everyone involved. Investors, businesses, even our international trade partners. But is it all about tariffs? We did see some positive economic data recently, right? So how much of this market surge do you think is due to tariff speculation versus genuine underlying economic strength? We've seen this pattern before, haven't we? Big tariff announcements, all this fanfare, and then they get delayed, revised, or even scrapped altogether. It makes it tough for businesses to plan ahead and for investors to get a clear picture of the risks and opportunities out there. Exactly. It's not just happening here in the U.S., right? Remember how the European Union, Mexico, Canada, they all put their retaliatory tariffs on hold while those negotiations were going on? It just shows how intertwined global trade is and how those U.S. tariff policies can have a ripple effect everywhere. It's like a delicate balancing act, those international trade relationships. The fact that those trading partners were willing to hold back on their countermeasures, it suggests they're hoping for a negotiated solution. But it also shows how easily things could get messy, how things could break down if those negotiations fail, or if the U.S. goes ahead and implements those big tariffs. All right, let's take a step back for a moment and look at the broader economic picture. We did see U.S. economic output increase in March, which is a good sign, right? But at the same time, it looks like overall growth for the first quarter might be a bit slower than people initially expected. That's according to the S&P Global Flash U.S. Composite PMI. It's a bit of a mixed bag, isn't it? On one hand, that increase in March output is encouraging, for sure. But that slower overall growth for the first quarter, it suggests that the economy might not be picking up steam as quickly as some were hoping. It's important to keep those nuances in mind when we're trying to make sense of how the market's reacting to this tariff news. Definitely, and looking ahead, there are a few key economic data releases that everyone's going to be watching closely. February's Personal Consumption Expenditures Index, the PCE index, that's coming out soon. That one's a big deal because it tracks how much people are spending and, importantly, how much they're paying for things. It's the Federal Reserve's favorite way to measure inflation, so they'll be paying close attention. And we've also got those quarterly earnings reports rolling in from some big names, right? Lululemon, GameStop, Dollar Tree, all of them reporting. Those reports, they'll give us a better sense of how individual companies are doing financially and maybe offer some clues about broader economic trends. Those upcoming data points, those earnings reports, they're going to be crucial. They'll either confirm or challenge that current market optimism about those potential tariff adjustments. A PCE index, that'll be particularly important for gauging inflationary pressures. And those corporate earnings, well, they'll give us a ground level view of how businesses are performing in this current economic climate. Last but not least, let's talk about what's happening with Treasury yields and market volatility. We saw that 10-year Treasury bond yield go up, didn't we? And that usually happens when people are less worried about those potential negative impacts of tariffs, the impacts on economic growth and global trade. Exactly. When investors start feeling less anxious about those big economic headwinds, like the ones that could come from escalating tariffs, they tend to move away from those safe haven government bonds. And that pushes bond prices down, which in turn drives those yields up. That's what we saw happening with that 10-year Treasury yield. And another sign that the market's feeling less fearful, less on edge, that feeble volatility index, the VIX, it dropped. Think of it as the market's anxiety meter, right? When it goes down, it generally means investors are feeling more relaxed, less worried about any big surprises coming their way. It actually hit its lowest point for the month. So for now, at least, it seems like investors are feeling a bit more at ease about those big market swings. The VIX, it's often seen as a barometer of market sentiment, isn't it? A lower VIX usually means things are relatively calm, that anxiety among investors is down, which makes sense given that positive market reaction to the news about those potential tariff changes. So to sum it all up for you, we've had a pretty impressive rally in U.S. stock markets. A lot of that's been driven by optimism, by hope that the Trump administration might tweak those upcoming tariffs. Technology stocks and companies like Tesla, they were definitely among the winners. But that positive sentiment, it seemed to spread across different sectors, different company sizes. We also talked about Cathie Wood's latest investment moves, that bankruptcy filing from 23andMe, and that ongoing uncertainty hang over the administration's trade policies. Now, even with that positive market reaction, we did see some mixed signals from the recent economic data. Output went up in March, but overall growth for the first quarter might be a bit sluggish. And finally, we touched on those rising Treasury yields and that drop in market volatility, all signs of shifting sentiment, wouldn't you say? Hey, thanks for joining us as we explore these recent financial developments. If you found this analysis helpful, insightful, hit that like button and subscribe. That way you won't miss out on any of our future discussions. See you next time.